I'm Wendy Moran, a shareholder at MHCS. I previously vlogged about significant changes coming from GAAP-based financial statements, including new revenue recognition guidance and new lease accounting guidance. These changes can be costly for businesses to implement. Today, I'm going to discuss an alternative non-GAAP framework that may be preferable to GAAP for some small and medium-sized entities. This framework is called the Financial Reporting Framework for Small and Medium-Sized Entities, or FRF for SME Accounting Framework. What is the FRF for SME framework? It is a standalone framework that is non-GAAP, as I mentioned. It's in more plain English than GAAP and is suitable for general use financial statements. Essentially, it is a blend of traditional accounting and accrual income tax methods. It uses historical costs rather than fair value, as GAAP does. Who can or should consider using this alternative framework? Small and medium-sized entities that are owner-managed and are for-profit, where users of the financial statements have direct access to management, and where there is no intent to go public or no chance of being purchased by a public company. It's generally applicable to most industries. What are the benefits of using the FRF for SME framework? Owners and managers may find the information to be more understandable. Costs can be better controlled due to the fact that it is more simplified than GAAP. There will be less internal costs of accounting for the new revenue recognition rules and lease rules, as well as less external costs in relation to accounting firms reviewing those changes. Users such as banks and bonding companies may get more clear and relevant financial information due to the decreased complexity. There's more targeted footnote disclosures to meet the needs of the users, again, less complexity, easier to understand. No derivative or hedge accounting or stock comp rules, and no concept of variable interest entities, which are all complex and sometimes costly GAAP accounting requirements. Leases and revenue will follow the traditional accounting rules, so no changes to these that are required under GAAP in 2019 and 2021. No requirement to assess impairment, report other comprehensive income, or report deferred tax liabilities. In addition, management has no requirement to assess going concern and no related disclosures required. The framework does not contain any industry-specific guidance that must be followed, again, decreasing the complexity. I will discuss more how this FRF for SME framework differs from GAAP in a subsequent video. For now, you may want to discuss this alternative framework with your accounting firm or us here at MHCS and the users of your financial statements to determine if this framework may be more preferable or acceptable than your current framework. Thank you.